everybody. It's Max here from the Insurance Dictionary. Don't forget to like and subscribe to all of our media outlets. We're here to help you understand your insurance. All right, today we're doing videos on our infographics, and it's final expense time, guys. We're going to be talking about final expense insurance. So what is final expense insurance? It's a whole life insurance policy designed with smaller face amounts. So we're talking $2,500 to $50,000 in death benefit. And they're designed to pay for our last final expenses. So funerals, cremations, outstanding debts, or maybe you just want to leave some money to your family or your kids. These policies are offered by countless insurance companies, but they all kind of offer the same features and benefits. A big benefit is that they have a fixed premium. So it's never going to go up, it's never going to go down. What you pay for is the final price. So that's always good. They're good to factor into a budget. These policies also build cash value over time. So the more you pay into them, the more cash value or the more equity you have in the policy. And they're also relatively easy to obtain. This means that companies are less strict with the health questions and the underwriting. While they're relatively easy to get, right, it's pretty easy to get a final expense insurance policy. In order to get that lowest price possible, a majority of policies still ask a few basic health questions, and they run a background check on your medical records and your prescription drug history. A couple things you want to watch out for. You want to watch out for graded death benefits, and you want to watch out for unnecessary riders too. So let's talk about that. A graded death benefit limits the death benefit of that policy usually for the first 2 or 3 years. So companies issue a graded death benefit for those who are too ill to qualify for a normal final expense plan. So let's do an example on that. So a woman who is currently suffering with lung cancer would not qualify for a traditional final expense plan, but she would qualify for a guaranteed issue plan with a graded death benefit. So if she dies within the first 2 years of that policy, if it's a 2-year graded death benefit, that means that she would receive all the money she put back in, right? So if she put in $1,000 for a $10,000 policy and dies within the first 2 years, she gets that $1,000 back plus 10 or 20% interest back. So that's something to always watch out for, but they are available and it's still good to have. Unnecessary riders. Anytime you're dealing with a rider on a policy, that means you're adding on extra features or benefits. So you always want to be aware if your insurance policy has a rider, you can always opt out of the rider to save a little bit on your monthly premiums. Some riders that are good to have, though, are accidental death benefit riders. So if you are killed in an accident or you die from the result of an accident, your death benefit usually doubles. You'll also want that accelerated death benefit. That means that if you're diagnosed with a terminal illness, you can access up to usually half of that policy benefit early to already pay for some final expenses. Just some good advice to finish out the video here. The younger and healthy you are, the less expensive your final expense insurance policy will be. So it's never going to get cheaper. That's really what I'm getting at. It's also tempting to purchase the biggest policy available, right? We have clients at Falcon Final Expense and Mallard Insurance Group. They want to buy that $50,000 policy, and they might be able to afford it for 6 months, but then, they fall on tough times or the premium just gets too much. In that case, the only one who wins in that scenario is the insurance company. So once again, guys, just some quick talking points on final expense insurance. Go to theinsurancedictionary.com to find out more or talk with your local agent. Take care. Have a great day.